All right, how's it going? This is going to be a video series called the Day Trader's Blueprint. It's going to be part one, which is going to go into the introduction of the series, as well as the first topic, which is expectations. We're going to hop right into it. These topics are going to cover expectations, process, self-control, risk management, and strategy refinement. There's a lot of content out there on entry models and strategies and here's how I made 30K this month, join my Discord and I'll show you how type of stuff. But there's not a lot of content out there that gives you the core foundation or fundamentals you need to get to somewhere like that where you're making, consistent, repeatable money. So that's the intent of this series, is to give you the foundational or fundamental core components that comprise a trader going from, poor trading or novice trading to exceptional. But before we get into all that, who am I? So I started trading in 2007. I think it's important to know, who the person is talking to you. So I started trading in 2007, like I said, initially getting into pink sheets. So the first trade I ever made was a pink sheet. I had to call TD Ameritrade to place the order because it was that bad of a stock that you had to call it in. It wasn't even tradable on the platform. Shortly after that, in 2007, 2008, the housing market crashed, and the market was bleeding most days. And so I learned how to trade in a bear market. A lot of my initial experience was short trading, short selling. The people around me that I was learning from, they were short sellers. They were contrarian traders. So that's kind of how I got started in the market, was by shorting, betting that, the stock was going to go down. And eventually I got into penny stocks and went to Forex and options and pretty much every tradable product before finally landing on futures. I still do some premium selling in options, but primarily trade NQ. Mindset. So mindset, I have an abundance mindset, I like to call it. I trade around statistics, which if every one of them had perfect entry criteria met, I could get 11 trades a day max. But that is not going to happen because it's never happened. Not all 11 of those scenarios are going to meet entry criteria perfectly. So it's just not going to give me that many. I usually average between like 1 to 3. But it's okay if one is red, because I know probably that same day there's going to be another opportunity. And if not that day, then definitely the next day. So there's no reason to get upset about one red trade, because abundance mindset means I'm going to have more opportunities. I'm also not concerned with siloing performance in buckets like the day's performance or the week's performance, because in reality, it really doesn't matter if you had a red or a green day. That is not going to mean anything for the outcome of your week, and your week is not going to mean anything for the outcome of your quarter, right? And et cetera, et cetera. So really, it doesn't matter if you silo your performance in all these, meaningless and made up containers of time. It's just how have you done over the long term. That's what matters the most. Also, I started nqstats.com, which also has its own X page. And this is just a culmination of information that I've gathered over time. Some of it is stats that I've seen and pooled. Other parts of it is concepts I've created. But it's really just my way to give back to the trading world for all the information that I've learned over time, and the people that have helped me for free. So this is my attempt at helping others for free, as well as this series of videos I'm doing right now. Also, recent performance. So I think it's important to show performance if you're going to start trying to teach somebody. Again, this content is for free, so I'm not going to give you my bank statements and trading broker statements and all that, because to be honest, it's no one's business what I make. But in terms of performance, how have I done recently? Well, here's how I've done recently. And you can also find this at Probable Chris. That's my X page. I've posted months and months. You can go back months see all the trade recaps and posts I've made and performances I've posted and all that. But here's just since June. So this is June 2025. It's from NinjaTrader, pulling a performance report and just showing since June. The chart on the left is your buy day. So you can see it's just consistently up to the right. There's some blips in there, some lost days, but mostly just up to the right. But that doesn't tell you a whole lot, because in any one of those days or multiple of those days, I could have taken huge losses and then just YOLO'd my way back to green or back to break even, and that would not be reflected on the buy day performance. So if you look over to the right, that's net profit per trade. So every single trade that was taken, and that includes every scale. So it counts every scale as an individual trade. So if I were to buy 2 contracts and then scale out one and scale out another, that's technically 2 trades in the eyes of this performance report. So it's saying 140 trades is actually a lot, I think, less than that. But since it counts every scale, in that period of time I've scaled a lot. A lot of trades have had scale outs, so maybe closer to like 100 trades, if I had to guess, like full end-to-end trades. But anyways, you can see the buy trade performance there. So no crazy huge losses that I had to climb out of. Just consistent wins with relatively consistent losses for the times that lost. Within there's a lot of smaller little blips as well, and those are just break evens. So I always set my break even to 1 point of profit. So if I enter at like 24,000, then my break even goes 24,001. That way I just cover the comms, right? It doesn't make sense to me to move your stop break even directly at your entry and then pay the comms, pay the commissions. Like, why? Just give yourself the point and cover the commissions. So all my break evens are actually profitable by a couple of dollars, so it'll count that as a profitable trade as well. So like if I were to pull win rate, it's going to say my win rate is substantially higher than it actually is, because it's also counting every break even as a win, because it was 1 point of profit, or like a half a point, or whatever it ends up getting me out at. But yeah, so that's a little bit about my performance. Hopefully that satisfies the itch somewhat. not gonna go much more into it than that. If you need more than that, then sorry, it's not gonna be provided. But who is this series for? This is designed specifically for traders who are close to being profitable. So it's for those who are kind of teetering that break-even line. For people with an existing strategy, you have a good fundamental understanding of the market. You've been through maybe a bull and bear cycle at least once, and you're just kind of looking for those pieces to get you across the finish line. It's not for somebody who is brand new to the market. It's going to assume you have a fundamental understanding and you know certain terminology, and you at least have a strategy you're currently working with. If you're bouncing between strategies, like let's just say last week you were all about market profile, and now this week you're all about moving averages or whatever, this is not for you, because you need to come to a point where you're trading a singular strategy consistently, and then from there you can refine. But until you've gotten to a point where you're sticking with something, then you're not at a point where you can refine. All right. And finally, expectations. So that's the first topic. And I just want to set the stage. This is going to be a smaller topic. This is the smallest topic. It's the shortest topic, but it's important to come right out the gate with, expectations. Some common misconceptions is that trading is easy. You see a lot on X or YouTube of people, making these huge prop firm payouts or personal account payouts or whatever, and it creates the illusion that like trading is easy. For starters, you don't know, unless they're providing you long-term performance. A single day's performance means nothing. You don't know if they're 20 prop accounts. They could have blown them all yesterday, and the ones they're showing today are brand new accounts. You have no idea because a lot of people don't share that kind of stuff. They just share the big wins. And it creates the illusion of people thinking that it's easy. It's definitely not easy. Also, there's no such thing as a trader who never loses. Um, Everybody loses. There's just no possible way you could win every trade forever. You're going to lose. You're going to have periods of drawdown. It's natural. Also, a misconception is plug and play. So a lot of people think you can just buy a strategy, right? You go buy X Guru's Discord service and he's going to teach you his master strategy. That doesn't work. And the reason I know it doesn't work is because that's what, the bulk of people out there selling stuff, that's what they're selling. Yet the bulk of people out there that are trading lose money. 90% roughly, right? That's like the going stat that you can Google. Like 90% of traders fail, maybe even higher, maybe slightly lower. I don't know, but it's close to 90. That's all. That paints. If you think about that for a second, everybody's selling content, everybody's selling strategies, and this is the winning one, and everybody's saying like their strategy is the best, and everybody's selling it. So if 100 people are selling something that generates consistent profitable results, then if 100 people were to buy it, you think the efficacy or the win rate of people trading that strategy would be more than 10%, right? But it's not. The bulk of people simply fail. And that's because the bulk of the content out there is simply plug and play. It doesn't work. Also, fast success is not a thing. I didn't see results that I liked or would consider profitable until 2017. So it took me like a decade before I even got to a point where I was like, I'm actually doing good now. Prior to that, it was horrible, not having good results at all. Some people learn a lot quicker, than a decade. Some people never hit profitability. Everybody's on their own timeline. Everybody's on their own path. So important to have that expectation that your path is different than anybody else's. You're going to learn what you're going to learn. It's going to take the time it takes. And the notion that there's no process needed, that you can just kind of wing it, that's not going to work for you long term. So realistically, realistic expectations is modest returns. So if you could make anywhere from 5 to 1%, I mean, if you're doing 2% on average a day, you're killing it. But even if you're doing like 0.5% a day, you're still beating the market, substantially beating the market at the end of the year. Whereas if you were like buy and holding, but a lot of people can't be content with that, right? They want more than 0.5% growth. You could take $100 or $1,000 and just make 5%. So $100, you make $5. And the next day, $105, you make 5% on that. You just keep compounding that as your average every day, 0.5%. Sorry, I did that math wrong. It'd be 50 cents, but you get the picture. You're compounding over time. That's just not enough for people, right? So they want more. They can't be content with modest returns, and modest returns can be substantial returns long term. Also, again, like I said, losses are normal. The time commitment is there. You have to put in substantial time. Plug and play is not real, and there are capital requirements. So the prop firm, what I call the sim farms, they're not real prop firms. The ones I'm talking about, the ones that just care about your eval fees. There are some real prop firms out there, like Ray and Trading and Apteros and SMB and some others that will put you into real money, and they want to scale you and see you succeed. But a lot of these other ones, like, I'm not gonna name names and become enemies with anyone, but you know who I'm talking about. The ones that are always offering 90% discounts every other day. Those guys, they're the eval farms. They just want your eval money. So stop giving your money away and get into a capital preservation mindset. Set a budget for yourself. Stop YOLOing and take it seriously. The name of the game is capital preservation. Making decisions today that is going to benefit you tomorrow and in the long run. I see a lot of people on X or FinX who are very, today focused, when that's not going to last very long. You have to be a long-term mindset to where you're prioritizing tomorrow, right? If you don't leave yourself any capital for tomorrow, then you're not going to have anything to trade. So every day, your decisions you make need to be based solely off of protecting yourself for the future and having capital to trade tomorrow. And that's it for today. So that's going to be video 1. The next video, we're going to dive into process. So it'll be a little longer, a little more intricate. And we'll take it from there and we'll go down these series. But that's it for part 1. Next will be part 2. So take care.